Hi, this is Chris with Investors Underground, and today we're going to do a trade recap on the stock SGD, which was a recent parabolic runner. It went from about 60 cents all the way up to $8 over the course of a day or two. And so what I'm going to detail in this video are what are the signs to really look for and how to identify the structure of a trade that could turn into one of these. A lot of times when we see a parabolic runner, they seem random or they seem like it's just a black swan. But if you dig a little bit deeper, you can see that there's underlying variables that contribute to these types of moves. And the goal of this video is to help you to identify those so that you can either capitalize on them on the long side or at least just avoid them on the short side. So the first thing I want to highlight about this chart is how far it's come down. And so when it first hit the market in late September, it IPO'd at about 10 and it's faded all the way down until it was under $1. The volume has been dead for months and really nothing was happening until you had a spike about a week before the main move, and that's when you had a 4 million share day where it spiked up and then it immediately came back down, and it was a really easy fade for short sellers. And also with this stock is they had a dilution planned that a lot of people were anticipating on the short side. And so this spike right here was an easy fade, and a lot of shorts stayed in it anticipating that new dilution that was coming. And just to give a slightly more detailed view of that process, this was that 4 million share day around here. It spiked up and almost immediately just started fading back, and it was a slow drip out. And so I want you to take a look at the volume down here. We go from having a large volume chunk right there to really fading off and getting less and less and less. And so I want you to think about the structure behind this. If you had a spike and a lot of short sellers got in and they were having a smooth ride down, not only are they feeling very confident with the trade that this is going their way, but there's also a catalyst coming up for more dilution. And so as this stock goes on, if you have short sellers that are still in there, they might have a good solid price on it, and they're just kind of riding it out until the next catalyst for it to go down. Take a look at the volume down here, and you can see it goes from fairly strong, and it really just tapers off. And so you might have had 4 million shares of volume traded here, but then it drops down to a couple 100,000 shares, 50,000 shares. And so if there's short sellers that are still in there with large positions, they can't get out without moving the price when they're in here. And so that's something to take note of because that will come into play a little bit later on. And so we're going to fast forward to when we had the catalyst, and now I'm going to pull up the chart for the intraday on the 1 minute. So here's the 1 minute chart on the day that it went parabolic. And you had a catalyst come around right in the morning. You can see that's when the news started. And what that catalyst was is that the company issued something called an RW. And that means a registration withdrawal. And so that dilution that they had planned, they then withdrew that. They took that off of the table. And so a lot of people that were anticipating that dilution coming up and possibly a further share price decrease, now that catalyst was not only taken away, but it reversed. And so now you have a lot of short sellers who are still in there who were anticipating that further dilution that are now getting on the wrong side of the trade just as volume is starting to pick slightly back up. And so you can see as some of those shorts start to cover, again, it hasn't moved a whole lot yet, but you can see that volume increasing, and it's possible that they could have been having forced buy-ins. It was a very low float stock, and it's very difficult to borrow. And so you might have had a buy-in day where you start getting some calls from the broker, and you have to start returning some of those short shares. And so this was building early on in the morning, and the day before it actually had a spike down day slightly, and that triggered what's called the SSR. And that's where if a stock drops by more than 10% in a day, that day and the following day it has an SSR, which is the short sale restriction on it. And that just means that if someone wants to short the stock, they can't short on the bid, they have to short on the offer. And so they can't really push the price down, they have to wait for the price to come up and to fill their short order. Okay, so that's something to keep in mind for later because that contributes to the overall structure of the stock. And so as the morning plays out, this is when it started to get on Nate's radar. He had noticed that the company had issued that RW, that registration withdrawal notice, and basically that a lot of shorts that might have been in from a couple of days ago are now on the wrong side and they might start having buy-ins. And so you can see it's holding VWAP very well. The volume is starting to increase, and just throughout the day, it's not a real parabolic move. It's just a slow, steady grind up. And so it never really causes shorts to panic and just to get out of their position at any price, but they really are just getting their position worked against them throughout the day. And you can see some of this volume starts to come in on the long side, and then when it starts to build up here, that's when you start to see some really large bids appear on the level 2. Okay, and so you have a situation where a stock was beaten down, it's loaded with short sellers, and now that catalyst for the downside is taken away, and now you have some long buyers that might be interested, you have some shorts that are on the wrong side. And you remember that daily chart I showed you, there's no real bag holders in this stock left. Anyone who wanted to sell this stock has sold over the last couple of months. And so you have a very thin offer book. And that just means that if you look at this stock through the perspective of supply and demand, the supply is very limited, but you have demand in the form of longs coming in here, and then also short sellers who have to cover, and that's a type of deferred long where they have to become the demand at some point when they cover their positions. And so you have this slow build up, the volume starts to increase, and this is where it got on our radar, and we wanted to get in for a trade. Okay, so we knew that the structure was vulnerable on the supply side, very thin supply, and it was building on the demand side, and it was filled with short sellers who then have to eventually buy back if the stock keeps going against them. And so this made for a situation where the stock was vulnerable to a big price increase, and then that could trigger what's called a circuit halt. And so a circuit halt is basically when a stock gets paused for volatility. So when it has a big move up or a big move down, that stock can get paused for 5 minutes, and then it'll kind of let things settle down, and then it'll open back up, and the next leg will happen. So those circuit halts are determined by where the stock came from. And so it opened below 75 cents, and that really made the circuit bands on it very small and sensitive. So that means that even small moves up or small moves down can really trigger a circuit halt. And you can have those halt several times throughout the day. And so what we were anticipating is that the stock was rising, and it got to a point where you had some people who needed to cover soon. You had some real demand coming in. And if that first couple of circuit halts started to trigger, it could really cascade and get out of control and be a dangerous situation for short sellers, and it could be something to take advantage on the long side. And so Nate and I were actually watching this and messaging in the Investors Underground room about this. We were anticipating it coming up, and we knew that we wanted to enter a position. And so I got in around that, just below that $2 mark, probably around 190 or so. And I know Nate had an initial position around there as well. Okay. And now you had a circuit halt up, I believe, and then you had a circuit halt down. So it doesn't mean that when a circuit halt goes down on a name like this that it's necessarily bearish, because the circuit halt bands are so small on something like this that it's very sensitive to those. And so what you want to see is after the circuit halt, then what happens? And so after it had this one circuit halt down here, it had a little bit of volume, but you could just see that price was soaking right back up. It was at that 170 level, it slammed down, and it got soaked right back up. And so that means that even if there are some sellers, even if there's some shorts still in there, the demand is increasing and it's going into more circuit halts. And so Nate added to his position down here. I was in an initial position from here, and then we anticipated it going from a circuit halt to a circuit halt to a circuit halt, and that's really how we traded this. We wanted to get in close to the point where it had a catalyst of having that circuit halt chain of events start to unfold. And so it had 6 or 7 circuit halts over the next hour or so, and that brought it up to about 350, and then we had a slight dip, and then you can see the wicks on the bottom of these. It's soaked up. The demand wall is still coming up from down here. We're still holding above VWAP. We have those tails on the bottoms of the wicks, and that symbolizes that price is dipping down and getting soaked back up, soaked back up, soaked back up. And so then over the following hour, you had another 5 or 6 circuit halts, and that really drove the price up into that $4 range. And that's where I took my profits. I had one entry, I had one exit, clean trade, about 100%, and I was very happy with it. And Nate had a couple of entries down here, down here, and that's where he added, and so he had a good cost basis, and then he likes to add in on multiple parts, and he likes to sell out along the way. And so we'll pull up his chart here on the screen, but you can see where he added in and then sold out as this stock really played out. So the question becomes, how far does a stock like this go? And now no one can ever tell precisely, but you can get a general sense of how far the range might be based on how limited the supply is and as long as that demand is increasing. And so for me, once I had a 100% win, I just wanted to cash out. I was in for a great trade and I was done with it. But you can see that as the volume stays green, as you still have more demand coming up, it just kept circuiting and circuiting. And I know Nate had some shares that he was selling up here, and so he rode this for further than I did, which was great. And you can see it really built up until you had one of these top wicks up here, and that symbolized maybe there was a little bit of supply coming on, and then that started the circuit halt down, circuit halt down, circuit halt down. So even if you had a little bit more of an aggressive approach, you could have still rode this all the way up here, all the way up here, and you wouldn't really be down to this price until 2 circuit halts in, and then it eventually settled out. And so kind of the life cycle of these trades is that you have a structure that's vulnerable to a big squeeze. You have demand increasing, you have limited supply, you have dips getting soaked, you have the SSR on, the short sale restriction so that shorts can't really hammer into the same way, and when they are present, you can see them on the offer, and on that halt down right into 170 or that area, you could see it halted down, and when it opened up, you could see all those offers stacked on the right side of the level 2, and then they immediately all got taken out, and it trapped and swiped back up, and then those circuit halts continued. And so the way that these trades really play out is they circuit halt until you really get enough longs in there and enough shorts blown out that the supply starts to really build up overhead, and that's how you can get those big moves down. And so I was only interested in taking a piece of this trade from just under 2 to just under 4, and it was 100% gain, and it was a little bit less than 2 hours, and it was a great trade. And so those are really some of the key variables that you want to pay attention to on a situation like this. You want something with limited supply, with increasing demand, with a catalyst that has tight circuit bands on it, and you want something that might have an SSR, a short sale restriction on it, and you want something that can really open up, go circuit to circuit, and you just want to take a piece of that. You don't have to ride it for the entire length of the trade. So I hope that this has been helpful. This was a great trade for us, and I hope that you check out Investors Underground, where you can get real-time commentary on setups like this, and you have very experienced traders in that room that can share their insights, and you can become a better trader for it. Thank you.